Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, August 20th, 2025. It's 10:15 a.m. Eastern Time. So I'm starting this video. This is video number 2 of the day. And got you out one with long trade ideas. I figured I'd do that first because it was shorter, only 9 trade ideas popped out. Again, what I did, if you didn't watch that one, I went through the components of the Nasdaq 100 today, all of them, and scratched down on a pad. I had 2 columns, well, those that stood out as potential long trade ideas and those that stood out as shorts. As I mentioned in that previous video, about 2/3 of those stocks I didn't really have much of an opinion on, and of the ones that I came out with, 9 longs and 24 shorts, so about 3-to-1. Which again, the takeaway for me, this is how I see the charts. You may see them different. It seems to be about a 3-to-1 ratio of bearish looking charts. And again, there's a big difference between a actionable trade, which I went through in that last video and I'll do in this one. In other words, stocks that have triggered if it's a bearish setup, you need to trigger a sell signal via breakdown below a bearish chart pattern and or any other key technical level, such as a horizontal support level, key moving averages, or maybe put in some type of bearish candlestick reversal pattern or sell signal. Okay, so I'll dive in. Again, I went over the indexes in the last one. I'll just real quickly go over here. So like I said in that last video, I got longs out too, none of which I'm taking at this point in time. Some of which I may, depending on how things develop going forward. But as of now, we have the first, actually, I'd say the best sell signals we've had in many months. I've thrown out since since we took out the 200-day moving averages, which initially I said no more shorting. For me, I don't think it's objective to short above the 200s. And then we took a shot at a couple sell signals, and I think this one lasts, that trend line break right there. And I laid out targets for you, which I still maintain. These are near-term swing targets, 1, 2, 3. You do have some pretty good support levels, which I went over in that video I'm going to do now, and then I'll get into these stocks. So as you see here, the sell signals we had recently were the break of this minor trend line. As I mentioned, the divergences I've been talking about since back here have not only not been taken out, but they've grown even larger. This is your divergence. You see it shows very well on the weekly chart because these are big long-term multi-month divergences. And really, the current divergence for the most part, you can see it really stems from back here in the Nasdaq 100. It's been building now for a couple of years, really. And that's not unusual to see the bigger turns in the market. Remember, I've given you both for a while now some near-term swing targets as well, and they haven't changed one bit. In fact, it's still in play from back in the 2024 top. I laid out, if you're new to the site, I laid out 1, 2, 3, 4, 5, 6, 7 targets, which I still very much maintain. We hit T3 right here. Again, if you're new to the site, we were covering, I posted my clear preference, no more shorts, only longs. So, it's like any trade. If you're going to call a 50% move in a market, which is huge, especially on the downside, it's easy to be permanently bullish because stocks go up 80 something, whatever the statistics are, percent of the time. Short sellers, you can make a tremendous amount of money. If you go back and look at history, some of the most profitable traders, back to the days of Jeff C. Livermore, even in the financial crisis, George Soros, you name them, most of them have been short side traders, but you have to have precision. You can't stay too long to the party. And it's a whole different set of skill sets because, in a bull market, investors, you could be the worst market timer. If you have a 30, 40-year time horizon, you're going to get bailed out. You could be buying in at the top of the financial crisis. Now, if you held out, you'd be profitable today. It would have taken a long time to get there, taken a long time. And so that's it. So these targets, markets are fluid. I always say the charts are dynamic. So along the way, I can almost tell you now, we're not going to go from here to T7 without big, nice counter trend rallies, almost certainly, some of which I hope to be long. And that's it. However, keep in mind, we've already hit my first, second, and third targets. And we bounced. The bounces carried a little higher than I thought. I expected initially we'd probably go up to the 200s, and we took them out. So as long as we're above the 200s, that is bullish longer term. The markets are above the 200s. But if we take those out, which I suspect, and that kind of goes back to this daily chart I've given you, this odds for my longer term weekly targets will increase exponentially if and as we move down below there. In other words, the odds go up in more of a linear fashion. This is just a correction. Even I think for those listening to my voice that are bullish and looking for new highs in the market and ending the year positive, I think they would agree that we need at least a correction, right? I think very few would argue that, even if you're bullish. And so I give new targets that if you're bullish, you can go long in any of them, pull back to the 200s. But if we take the 200s out again, as history shows, that's a very bearish development. This is the last time the 200s were taken out. We back tested them, and then boom, you got that. All right, so that's it. And so that's why this area here, and really below that purple line, about 500, this is where the odds go up really substantially, that we're going to go down to my longer term targets. And being that T1, 2, and 3 have already been checked, that means we certainly could have another reaction off those. They could contain, any or all of those levels could contain a pullback and we go to new highs. But the odds are already increased that we'll go down through there, reaction or not, ultimately, because they've already been checked, if that makes sense. That's how I operate. That's how all the price targets on this site are geared. That's why I list multiple price targets. Upon the initial tag of each one, a reaction is likely. But once that reaction's happened, it opens the door for that level to be broken, whether there's another couple tests or not. So it just increases the odds there. So there it is. T4 is my next target. To just kind of put it in perspective, if T4 is hit from the recent highs last week, I'm going to measure it out for you here. That's going to be a drop of almost 34%. So the Nasdaq will get whacked in about a third. That would also take us well below those 200-day moving averages, and again, in my opinion, significantly increase the odds we go here. I know most people they think I've done this a long time. My targets have always been aggressive, both on long trades and not on all of them. Some are typical swing trades. I'm targeting 5, 8, 10, 15%. And then other trades I give you on long side trades and 100+% targets, several a year, and those are hit. And once in a while, big downside short targets. So that's it. Not much else to add. Let's dive into the charts. I told you I would go over the Mag 8 here. So what makes this one different? Let me just hit on SPY before I move forward and focus on the Nasdaq. Again, I've covered this recently. Since I got back, we broke down these minor trend lines, very well defined. Big divergences, and so based on, again, my read on the charts, right or wrong, and fundamentals, I think this has the potential, as I thought this one did, to be the start of a much bigger move down. And only time will tell, all right? But I can tell you definitively, these are very clean sell signals, and the price action so far has been pretty impulsive. Again, there's a lot on the economic calendar coming up this week, starting with some job numbers tomorrow. Powell talking on Friday. Expect some volatility. But I always say this. A buy or a sell signal, you can take it on face value. It is what it is until unless taken out. So that's all I can tell you definitively. I just told you a bunch of maybes and here's what I think, and I can't guarantee it. But I can tell you definitively, as I did yesterday and Monday, that these are sell signals and the first ones in a while. And now I'm going to roll into what makes them a little bit different from the other ones we've had since we've taken out the 200-day moving averages. NVIDIA, we did have a breakdown there. I highlighted it at the time. That was the primary uptrend line. And I often say this, when a stock breaks out of a downtrend line or breaks down below an uptrend line, sometimes you go down, the correction starts before you have your first decent counter trend rally. And quite often, especially in a strong market or a strong stock, you break down and you backtest. That's all NVIDIA did. I haven't tweaked or modified. This is the primary uptrend line off the April lows right here, the most important, well-defined trend line. And we broke down, we backtested 1, 2, 3, 4, 5, 6, 7, 8 days. Perfect backtest. Look at that. And then, as I often say, The problem with shorting a back test is that you can continue to back test and you're going up, up, up. So your short's going underwater. What I like to see is ultimately a rejection, an impulsive rejection off there. And that was it. And that was the top. And so far, or maybe equal high, yeah, it was the top. That's the same top. And then we set up the secondary trend line and we're starting to roll over now. So there's NVIDIA, comes after the negative divergence. So we'll see. One of these divergent highs certainly has the potential to be the one that ends with a major trend change. And I think see weekly chart for long-term targets. Nothing's changed. That was the last divergent high. I certainly thought then that this would have the potential. There was our primary uptrend line from the, this one goes back to the 2022 lows, that purple trend line. And what happened is the AI hype and bubble has been strong. And so we made a marginal new and still divergent high. Let me give you my targets here. So, okay, here's my weekly chart that, again, I've given you with targets. These are potential, these right here. So forget about, I have the percentage measured from the drop. These are and haven't changed my targets on the video going back to created back in middle June 2024. So that's right here, June 2024. And so we got that sell signal and we hit my first target to the button pretty much, bounced, and then we hit it again. Support is support until that's broken. There's a second reaction off T1. There was a big intra-week move down below, but only to end the week back above it. So that is a successful defense. This is a weekly chart. That's all that matters. And so nothing's changed. We had a divergent high there. We made it a marginal, meaning slight, and that's marginal. The slight is relative. If you say, oh, well, Randy, from that high there, let me measure it. NVIDIA went up 19%. Everything is relative. That's on a drop that I'm calling for of, here it is. I measured it out when I laid out those targets, 72%. So a 15% move against a price target of 72 is minor, and it wouldn't even exceed a reasonable and a very favorable RR risk-reward ratio stop loss. So again, sometimes these things take time to play out. Now, if NVIDIA does this and it goes up, let's say, 30-40% from where I first laid out these targets. Again, T4 is being the final target, 72%. Then that's wrong. So I always say in my trades and in trading, there are two things when a trade doesn't work against you. There's a big difference to me being early and wrong. Wrong is if I take a trade, long, short, don't matter what it is, and I'm stopped out for a loss, and that loss is a actual paper or taken loss, hard loss. Whereas early is if I make a call on something and instead of, going straight down or in a, quicker fashion, which corrections usually do, it just takes longer to get there. So again, so far, this is a relatively marginal new high, still very much. In fact, the divergences are even bigger, and it just means now to get there to my fourth and final target, NVIDIA is going to have to drop by almost 80%, 78%, instead of the 72 I really called. So that's it. So it's really 8% more than when I first called it back here in the June 26th. So it would have been a 72% drop. That's when I laid those. You could see the pop-up box there. And now where I'm going is, okay, so what makes right now this week different? There's our primary uptrend line off the April lows. Again, we were covering all shorts there, the Nasdaq, everything going long. And it's been a stretched rally, to say the least. But the reason I'm doing this video once again is to say this time is different in the fact it's not just a trend line break on SPY or QQQ. We had a couple, not many, a couple of those. It's trend line breaks or sell signals, I should say. It's not always trend lines. Sometimes it's moving averages or price support on the majority of these stocks. So you don't have to squint to see it. That's breakdown, backtest, and impulsive rejection. Microsoft. For months, I've been highlighting this price channel. Very clean, well-defined. That uptrend line, there was a price channel. There was this little earnings quirk there, but it just made a new divergent high. They faded all that and then some. And in my last update, I gave you 516 right there was the bottom of that earnings gap. That's been taken out. So first, this was the most significant level, the trend line taken out there. We're moving lower. Now we've taken out that pre-earnings gap. That means all the Johnny come latelys that they didn't want to buy Microsoft here in the April lows, and we were covering shorts and going long. They didn't even want to buy it here when it had that big breakout gap and right there, the runaway gap. They wanted to buy it here on these record earnings. If anybody out there ever expects anything less than a record quarter, blowout quarter, that's what the FANGs do. They always, just almost always report record earnings, record growth, record sale, blah, blah, blah. And that's how typically things top. Just like the new iPhone's always going to be better than the last iPhone. You're not going to make one with a slower processor or a lower resolution monitor. And so it's just same old thing with these guys. But what happens is technicals and fundamentals ultimately weigh in. Stocks get ahead on the sell. So, all right, point is breakdown. Let me just move faster here. Apple, Apple's playing catch up because it was beat down and then all that news. Again, if you look at Apple's a stock. You can say what you want about where you think it's going, but it's a stock, and it was always for many, many years the top component of the Nasdaq S&P 500, the first to make the $1 trillion club, then $2 trillion, $3 trillion, and it peaked back in the end of 2024, and it's still below that peak. So, and it did so with big divergence. So I don't have a strong opinion on Apple right now, but. Alphabet, again, that's why I'm doing this. Beautiful divergent high, bearish rising wedge, and a back test of that primary uptrend line that goes all the way back. Again, I just covered these recently. Let me go a little faster here. But that one broke down yesterday. Remember, I was waiting for that one to break, and look, follow through today. So that's it. And I'm just trying to, there's some minor resistance right here because you have all these reaction highs. So they'll probably come in and buy this one here. But I'd be careful. Now, let me say that. Okay, there is so much hot air. I've covered this recently. I follow metrics like short interest. And for last couple reports, they report that twice a month. We have had many of these key stocks at 52-week lows in short interest. So where I'm going with this is I don't get cute and try to play these first bounces when you get these big breakdowns. You're going to get them. I want to sit tight. This is a bubble that, overvaluation, and then we've had the meme stocks and all that. So while you can certainly try if you're nimble to gain bounces off support, take it collectively. Don't look at just one stock, as if Alphabet's at support, but yet at the same very time, NVIDIA, Microsoft, and Amazon and Meta are all breaking support. Alphabet may go right down through there to the next support level. All right, and ultimately here's a trend line right here, an uptrend line. This one's probably going to go to, again, this is what makes it different, guys. These mag 8, 9, 10, whatever you want to call it, stocks breaking down. Amazon took out that trend line I gave you yesterday, the minor trend line. That's a sell signal all day long. There's a big old gap that Meta's entered now. That's their earnings gap right here. See that big earnings gap? We've now entered the gap. So the way technical analysis works and trading is usually gaps once entered are backfilled. So it says more downside most likely for Meta. Doesn't guarantee it, but it's just traders focus on those gaps, and that's what they want to buy. Actually closed down there that day. So you can target the bottom of that red candle as well. Broadcom, again, not to, sound like a broken record here, but this is why this is different. This is what makes this breakdown different, because when we had other breakdowns on the Nasdaq, it wasn't many, a couple that I pointed out on QQQ, but we didn't have the majority. I always said, and I've been saying it for years, and I've been saying it more recently in the last few months, you need to see the majority of the top 10, not one or two breakdown, but the majority, and that's what I'm showing you today. Tesla, I highlighted this recently. I told you it broke out of this symmetrical triangle pattern. There's your primary downtrend line, your uptrend line off the lows. It broke out. I told you I suspect it would probably fail. So far it's failed because we're back in the triangle right at the apex. But if you shoot down through the other side and you have the 200 just below, that's going to mean this was a failed breakout, aka bull trap. Traders buy breakouts. On the long side, shorts get squeezed out or they're stopped out, and then you have lower short interest, so fewer shorts to cover there and to buy their stocks to close out the positions. You also have the longs that are going to have their stops down below here, so you can get a domino effect. Now, With that being said, just like the earlier video I did for you today, if you are bullish, and I know, a couple are, at least on the site, that at least sort of vocal about it. If this is a very objective entry point. You're right above the 200-day moving simple or exponential moving average, and you're right on uptrend line support. And so you can buy here if you are bullish on Tesla with a stop somewhat below. I'd probably put a little below the 200. Sometimes they're going to run through there a little bit real briefly. Again, your stops, I can't recommend a one-size-fits-all stop because your stops are commensurate. If you think Tesla's going to new highs, then that's saying the stock's going to go up over 54% from where it is today. If you're targeting, 60, 70, 80% of Tesla, then you can easily put a 10, 15, 20 plus % stop. But if you're only targeting, another run up to this level, 14%, yeah, you're going to need a lower stop. More a tighter stop, I should say. Netflix. Oh, wait. Okay. Yeah. Did I cover? I said I'd cover about the top 10. There's Netflix. Yeah, I'm bearish. I gave you targets on that one a while ago. This one put in a divergent high back here on the weekly chart. Here's your primary uptrend line and the 200. So Netflix is most likely going to pull back and has about another 15% downside to get there. And that is, again, I highlighted here, we had a sell signal after that divergent high broke down, and it's been moving lower since. Okay, now in no particular order, although I tend to go through, when I went through this list, as I told you earlier, it was by market cap. I can tell you right up front, a lot of these are semis. I've been persistently and consistently bearish on stocks recently. We've given you some long-term targets. The semiconductor ETF told you it really isn't going to get going until NVIDIA breaks down, and which it finally has. NVIDIA is the 800-pound gorilla in the sector. Lam Research, wash, rinse, repeat, guys. I make no guarantees to anything, but there's a beautiful divergent high and a nice clean uptrend line, beautiful bearish rising wedge. It's the same pattern right there. There's your negative divergence line. There's your uptrend line off the lows. This is what I call a trade setup. It's right on trend line support. Maybe we get another thrust up. Maybe it's a lot more. Maybe it keeps this uptrend line going and takes out the divergence. All I can tell you is a sell signal, an objective short entry would come on a break of the trend line, with this 90.67 being your first target, 86.57 your second, and then whatever that level is there. Okay, so that's a trade setup. Or another way to look at it, if maybe you don't care to short Lam Research, but you want to short the semis, the more you see breaking down, the more likely those breakdowns are to stick, and the more likely the sector ETF is going down. I didn't mean to do that. I'll get to KLAC. It's in my list. I'm just going on my notepad here, showing you the ones. Intuit. This one's nice. I was going to share this with you when I got back Monday, and I've been kind of catching up on things. It's been on my radar because you had a divergent high right here, a negative divergence, right? Last time we had a series of 1, 2, 3 divergent highs, and that resulted in a drop of about 25%. So this was a divergent high followed by a nice clean sell signal. See, just like the markets, we were building divergent. That was a divergent high, and so was that. And then we had a minor trend line break, but that's what did the trick. Doesn't sometimes when you're very overbought and a lot of hot air, you don't need to have a major long-term uptrend line. Sometimes it's these minor trend lines, especially when they get that last gasp of, hurrah after this was our primary uptrend line break. We had a sell signal. But just like the market, it went on to make a marginal new high. Like I said, sometimes it's one and done. When you break down, you zigzag and you get your first counter trend rally at a lower level. And sometimes in a strong stock or strong market, you break the primary trend line, you get that one last hurrah, new highs. What it does, the shorts just give up at that point. Some do, not me. You know me, I'm pretty tenacious when it comes to when I'm reading a chart. As long as the charts are still saying what they've been saying, I'm going to stick with my analysis. And or positioning, depending on where I'm at. I just came back from vacation, so I didn't have a lot recently, but started adding back with these sell signals the other day, and still waiting for Powell to finish saying what he's going to say at Jackson Hole before doing much more. And that's, so what I want to tell you here, what I've noticed, this I was going to mention, we had the other day, I noticed this bear flag pattern here. A bear flag consists of three components: a impulsive move down called the flagpole, followed by a formation that takes the form of a flag like that, always upward sloping and on lower decreased volume. And then your third thing and your sell signal comes on a breakdown below. So what you have yesterday is an impulsive break below the bear flag. And these are easy patterns to recognize, easy patterns to trade. The measured target, you go to the bottom of the flag, to the top of the flagpole. That's the impulsive move down. Take that flagpole, which I just did here, add it to the top of the flag, not the bottom, but the top, right before it breaks down, gives you your measured target. Guys, this never fails to amaze me when I take these chart patterns, wedges, flags, bear pennants, head and shoulders, unit cup and handles. It never fails to amaze me how often those align with levels that I've already had in place. Like you can see this trend line here. I created that back in March of 2024, that horizontal support level. In fact, I'm going to lower it and it's going to come in. Why am I lowering it? Not just to fit my flag measurement, honestly. I see here that was an old trend line I created back here to the left of the chart, way back here to the left of the chart. And since then, I haven't touched it, but I see now reactions here, and a breakout. And so that's where I would have, if I hadn't have done this, I would have modified that line. If I was going to short this one, look for a target, 620 comes in perfect, the measured target. So answers your question. If you think where I think Intuit's going, that's it. Is it too late? No. The pattern bear flag just broke down recently. You might want to scrub it for earnings, see when they're going to report. 8/21 looks like the next day or tomorrow. Sorry, guys. This is my earnings right here. So, yeah, but where does it go? If I'm a betting man, I'm going to say it's going to go down. However, that also has the potential to foil this flag if it's earnings, they blow it away. And if so, then again, you take a stock the day before earnings, you're running a high risk. I personally wouldn't take a full position, but sometimes I make earnings plays. I just keep it light. And then if it lets me in the next day, if it craps out after earnings, but it's not all the way down, I may add to it. So that's Intuit. Let me move a little faster here so I can get to the rest. NVIDIA, I already covered, but it's in, these are just ones, and I covered Microsoft as I went through this, the components, Alphabet, breakdown, I already covered that one. Amazon, I already covered that one. This is just the list of the 24 that I think look like shorts. Meta, I don't know if I covered that. Meta, there's your previous all-time highs. This is a breakout to new highs. It is now officially a failed breakout, aka bear trap, whatever you want to call it. And it's entered the gap. I already covered that before, but that's bearish unless it can get back up. Sometimes, look, I'll say this. Sometimes stocks, when they break out the new highs, they come in and they don't make a perfect back test of the high. They do this to kind of blow out the weak-handed longs and suck in some shorts and then go up. However, as I like to say, a failed breakout is a failed breakout unless it happens. So if you can do that, then, it's good. But it has big divergence. So again, if I'm a betting man, which I am by nature, by doing what I do for a living, trading stocks, I'm going to say that based on the divergences, whether it snaps back up there tomorrow, today, this week or not, I still think this has the potential to be a major top. Okay, back to where it was. AVGO, Broadcom, not sure if I covered that. Yes, I think I did. You can see the clear breakdown here. Well-defined, very well-defined trend line right there. So that's why I'm doing this, again, to show you both individual trade ideas if you wanted to. Oh, I already covered Netflix. That was one of them, by the way, Netflix, in my 24. AMD, Advanced Micro. I mean, come on. This is just the trend lines this is a price channel. They don't get much better defined than that. That is a clear uptrend line, price channel, complete with negative divergences at the top. Again, channels can go. It's an extended one. And look where it failed. This was a major reaction high there. Take it across, 186.52. It failed at resistance, then broke the channel. And you don't have to squint to see, is this a breakdown? That's impulsive selling. So anything can happen, guys. This market's been full of bullish exuberance. They may come in, and look, they're going to buy this dip somewhere in here. I doubt we're just going to crash right now. We've got a lot on the economic calendars this week. And you can see plenty of support levels coming up. This is my first support/target zone. So whether we kick back first or not, I think at minimum, we're going to go down here, and that's about another 7-8% drop on AMD. Again, another semiconductor. So as I go through my list of shorts here, remember there's so many in the semiconductor sector, you can keep it simple. We already have SOXX on as a short trade, so that's just an easier way to do it and not have to navigate earnings too, because you have an ETF, you have safety in numbers there. Cisco, divergent high, i.e. negative divergence. Nice support. This was a previous all-time high. Tested it, rejected. There's a breakout candle. Back test successful. Back testing right now. If it fails, that will be a failed breakout. That is technically a bearish event. Potential bear flag pattern right there. So if you get a pulsive red candle down, that's going to take this one back to the 200s or right here. I'll give you a target. I can see some resistance there, candles there, gap. And that's probably the measured target too of the bear flag pattern. Put it right there, roughly. Oh no, it actually takes it a little deeper. Okay, Cisco. Okay, that one's one of the ones on my list. Gilead, GILD. No sell signals at this point in time. I wish I had a better defined uptrend line. There's a minor trend line that might come into play. But this is a primary uptrend line right here. This guy here comes off the June 2024 lows. Again, I don't see any sell signals. This is just a form of negative divergence, which is not a sell signal. But it's setting up. I'll keep an eye on that one. MU, I have a question mark by. Yeah, okay. It's fine. I included it here. Divergent high, equal highs with lower lows on the indicators is negative divergence. And also at resistance, major gap right there. That was a breakaway gap on the downside. It was also resistance. This one failed, so it failed there. Took it out, and then that made it a false breakdown when it gapped down below it. Tried to get up there again, rejected once. Tried it again, rejected twice. And that's that. I'm going to maybe see it. Yeah, we have another trend line right there. So that's a bearish setup. Next sell signal come on a break of that trend line. LRCX, another semi equipment maker. Divergent high. Wash, rinse, repeat. This looks just like this. Bearish rising wedge back here. That's the nature of the semis. When they're hot, they're hot. And when they're not, they're not. That stock from that divergent high dropped about 51% or so. What we have right now, it's starting to crack. This trend line isn't super well defined, but it's enough. 3 confirming reactions, and you can see some of the targets. KLAC, another chip equipment maker. These are kind of the canaries in the coal mine. KLAC, AMAT. They make the equipment that makes chips. So when they start going down, they usually go down first when the chip equipment or the chip companies start cutting back on orders. That's your first tell. So they're the canary in the coal mines, if you will, for the tech chip sector, which is really the canary in the coal mine for the entire tech sector. All I can tell you, coming off a divergent high, and again, like a lot of things, we had these breakdowns. This is where I first started highlighting, getting short the semis recently, and we went down. It's not as if it didn't work. We made a marginal, ever so slightly higher high, which so far has failed. And that's it. So that's if I went to the weekly chart on these, I'm trying to get through this video to save time, but believe me, I look at these very, very much. And I wanted to say that too. On a lot of these stocks, when I gave you some sell signals a couple months ago, the first time after we took out the 200s, we didn't have divergence on a lot of stocks. Didn't have it on the weekly chart, which we do now. This one happened to have divergent high right there. It made up, again, a marginal news slightly and still divergent high. But this is a weekly chart. This tells me where the stock's going. The last divergent high was right here. To measure it for you, doesn't look like much, but that was a 44% drop. All right. So even if you are very bullish and you believe we are in some generational bull market that still has plenty of more room to run, you might consider the fact that even in a bull market, all stocks will come back and revert to the mean and check their primary uptrend lines. This is my long-term. This is 2009. This is that purple line, your primary uptrend line. Very, very well defined. So even if you are long-term bullish, you have to acknowledge that KLAC is getting stretched. It's long in the tooth, this rally. And to come back and just check that bull market uptrend line and keep the secular bull market alive, the stock may have to fall about 50, 60, about right there. I'm measuring. If it hit it there, that would be in June, late June, almost early July of 2026. That would be a 60% drop to get to the trend line. Again, I'm just going ahead of time where, if things fell. And so that would still be only return back to its primary bull market uptrend line. What I'm getting at, you got to understand how overstretched this market is and just how powerful it is. Mean reversions are a bitch if you're, either a long side trader in a bull market chasing highs and buying into the, hype that the market's just going to continue to go up for X, Y, and Z reasons. Same thing in a bear market. That's why I love trading bear markets and get the bottoms, and the rallies are explosive. Even the counter trend rallies, but especially the bottoms. So again, KLAC, if and when we get there, that's probably going to be one of my top picks on the long side. But that's a long way down. And right now, like I said, I'm see a lot of downside. All right, I'm going to go back to the daily chart, stick there. Just keep in mind that a lot of these stocks that I'm covering, I have looked at on multiple time frames, and most of them do have, for the first time in a while, negative divergence on the weekly charts as well. This is CSX. This is a railroad, so they're not all tech. Again, I went through the Nasdaq 100, and that was our last divergent high. The stock fell from there about 30%. This is a divergent high. No sell signal, none whatsoever. It's in an uptrend, but there's your uptrend line. You just set an alert, and if that alert goes off, probably coming back here, and I'd have to add additional targets for you. That's not what I meant to do. And that's not one of the ones I had. Although NSC, yeah, you can add that to the list. There's a breakdown, a back test of the primary uptrend line following a divergent high. So, and also, by the way, what looks like a buying climax when you see a surge in volume after an extended uptrend. That was an earnings buying climax right there. That usually marks an end of a uptrend in, followed by a new bear market. Alrighty, Marvel, MRVL. Next, another semi. This is what a hot, stocks that have very clearly bearish technicals. I've been talking about. When they finally start breaking down, it can be a pretty swift rush for the exits, especially in this kind of market condition, where there's extremely low short interest, extremely high bullish sentiment, meaning most bulls, what happens when bull markets die, when the last bull has bought his or her share and there's no one else left to buy, and then the shorts have given up, so they're not there to cover on these pullbacks, and so you get these swift drops, and we could have that in the market any day now. And so all I can tell you, this was a beautiful divergent high and a beautiful, well-defined uptrend line in Marvel. Breakdown, and like I said, sometimes you back test. And then from that back test there, the stock fell 61%. We've come full circle. This is the first divergent high. It's a rejection at the 200-day moving average. We took out the 200s right here. We back tested the 200, rejected, back tested again, rejected, and now we took out a very well-defined, clean uptrend line following that divergent high. So, yeah, that's that. More downside to come, most likely. Whether it kicks back today, tomorrow, next week, hard to say. That was Marvel, Monster, MNST, Monster Beverage. Not one of my favorites. Divergent high. Divergence isn't a sell signal. I don't have a well-defined uptrend line. There is a gap down below. So really probably about that 63-ish level of taken out. That'll break down. Not one of my favorites. AEP, American Electric Power. Utilities have also joined the AI hype bubble because AI companies, as you know, are very energy intensive, and so it's supposed to be bullish for the, and again, it's a self-fulfilling or a vicious cycle, if you will. The more money Alphabet and Microsoft and Apple and all these companies spend on AI, the more those AI stocks go up, particularly NVIDIA, is what we're seeing. And then, you want to watch things like SMCI. They build out the data centers and they start going down. It shows you maybe their orders are slowing. And then ultimately, if this AI bubble or when it pops or just deflates. AI is here to stay, but as I've said many times, it is absolutely nothing new. The general public believes it is a new thing because ChatGPT, those LLMs, everybody was just so impressed how a computer can talk like a human and write essays and all that shit. But AI has been around for decades. It's nothing new. And most of what's being pushed out there is quote unquote AI, just a new iteration and just search engines, just search queries and things like that. But again, there are I can see it's a generational step in computing and some benefits there. But my point being that the charts are the charts. So we all know that these utilities have been beneficiaries. There's your first minor trend line. There's the breakout. If it fails, 110.41 would be a failed breakout to new highs, take you down to the trend line, and then that would most likely go. There's negative divergence, and that would send this stock down to right here, right about there, 105.20. I see another stop here, about 184, the 200-day moving averages, and then potentially all these other lines there. All right, we're almost done, guys. PAYX, we've got about a half dozen more. Paychecks, keep in mind, this is also a tell on the economy. So that was divergent high 1. And again, it's not as if it didn't pan out. Correction. The divergence got even larger, even bigger correction. The divergence got even larger. In other words, it was not negated or taken out. It continued to build into that divergent high, followed by a very nice clean trend line break. And this is technical analysis. These are my kind of setups. Look at that. Boom. Earnings popped, but rallied back into the 200s. Got rejected. 2 attempts to get back above the 200s. Couldn't do it. Now you're at really nice support here. So all I can tell you, this is also a tell on the economy. Paychecks. Right behind ADP, they're the second biggest payroll processor, I believe. Huge support right there. And that's about 135. I'm going to lower it down to the recent low, make it about 135. Let's round it off. Everybody loves round numbers, right? 135, set an alert. Again, that has larger implications if and when taken out. You can see my long-term uptrend line. Again, you can view this better on a weekly chart, but look at that trend line right there. That's been taken out. That is a nice, well-defined long-term uptrend line. This is your next support level. This goes down. I think Paychecks is coming at minimum back to this level, 105. And so that would be about another 25% drop and quite possibly more. Again, if I want to go to the weekly charts, I see a big bearish rising wedge on the weekly time frame. That same trend line, the projection on a bearish rising wedge, you take the measured target is the widest part of the wedge right here, which I'm doing right there. Shrink it down, add that to where the wedge breaks down. That's my preferred method there. And I'm going to give you this. Maybe I'll revisit this a year from now or two and see if we hit that 81, 82 target, which I think is very likely. It's going to take the stock down by over 40%. Big negative divergence. So, all right, guys. Oh, a few more if you're still with me. CCEP. Yeah, Coca-Cola, Euro Pacific. Remember, we took Coke long. Was it Pepsi? We took Pepsi long earlier this year. This is Coca-Cola, Euro Pacific Partners. Trend line right there. We're almost to that trend line and the 200. So this one has dual support here. It's coming off a big divergent high. If it breaks that, that one's probably going lower. I'd rather short tech than blue chips, in a bear market, especially when it's a tech bubble. You're going to get more bang for your buck. TTWO, Take-Two Interactive Software. Simple stuff, guys, right? Divergent high, breakdown back test, correction. Divergent high, break of the first trend line. This is your second and primary uptrend line right here. And price support, or what I call a BOD level, benefit of the doubt, 219.63. Maybe I can zero that in. And usually if you have a recent low, you want to just set it. The recent low is right here, a little lower. You set a price. So I'm just going to set a price alert there so I can get a heads up if it gets close. Now, I might short that one individually. VRSK, this one already broke down right there. Took out in one fell swoop the 200-day moving averages and that nice clean up trend line hit this first support level I had here. You can see that line was created back in, did I just, oh, I just did that. Okay, that one today. Sorry, I went through these recently, and maybe some of these I did mark up. So it needs to take that out, be bounced. You know, if it back tests the trend line or the 200s, that would be an objective short, or a break of 259.12, the recent lows, and then it's going to take us down at least to this longer term, more significant uptrend line right there, and potentially some more of those. And last but not least, Dollar Tree, DLTR. I believe I highlighted either this one or Dollar General as a long earlier this year, and they did well. You know, it was beautiful. We had a divergent low there, divergent low, positive divergence at support, little basing pattern, W pattern we broke out of there. Again, it was either this one or Dollar General or both that I would have highlighted earlier in the year. But look, we just finally rallied right into resistance. These are, look, that level that created back in 2021. I haven't touched it since. It was resistance back then and support, of course, as well. And that's where we went. And that's where this rally ended. Then it broke that primary uptrend line right there and has just recently triggered a sell signal, I think. All right, so I'm done. Those are the ones I had. I'm just going to go to DG. Oh, that's the one we picked right here. I gave you this one, divergent low, earlier in the year. And we just hit my third and final target. I would have given that to you back on, you can see created back on November 25th. That is right here. So again, just a reminder for those that the QQQ is not the only trade. It's, you know, shouldn't be. There's been plenty of longs thrown out this year. And this one from those November lows to my final target was about a 60-70% rally gain. It took out this downtrend line. It's above it right now. So here's one. Yeah, you know what? I think you could probably short it. It's at my final target. B, there's negative divergence. Yeah, but you also just recently broke out and back tested the trend line. So I don't have a position in it, but there's the chart, and I'm probably going to come back, and it's probably going to come back and correct. I think that'll be the end of the run. That's usually why I list final targets. Typically, it's where I project where just by my analysis, that's going to be the end of the run, or at minimum where the risk reward is no longer favorable for adding a new long position or going long or even staying long. If you are long, just set a stop appropriately and let it run. You can see potential resistance / target way up there. All right, guys, I'm done. I'm going to wrap this video up, get it out to you guys, and just remember, a lot on the calendar this week. Not a lot left, but some things that can move the market. Employment numbers tomorrow. Powell flapping his jaw on Friday. We'll see what he says and does. And we have some the best looking sell signals that I've seen in many, many months in the market, and more importantly, the market leading stocks. This has been Randy Finney with Right Side of the Chart. Have a great day.